Good afternoon, everyone. It's Chris from Soul Society R as well as Excel. Happy 2025 to all in health, love, joy, and happiness, and many things to come. And if you're trying to learn trading, remember learn before you put money on the line. We use this adaptive algorithm that's built by us for side market, up market, as well as down market with no bias. Smash the like, share with your friends, give us your commentary, and let us know how we can help you and assist you. Let's go to the first slide that I have up here. And what I'm going to do is say Happy New Year once again. Remember, this is an outlook for 5 years out. This was the prior week video. I would put it out on December 28th and talking about the breadth of the market in relationship, to the market in the S&P Fortune 500 in the 11 sectors were going up while the breadth was negative. Let's go to the next slide. And what I did, I put the combination of the S&P E-mini, the NASDAQ 100, as well as the Dow Jones Industrial Average 6-year on a monthly bar. Each bar represent 1 month, which is 4 weeks. Each week has 5 days trading. And what I did, I'm using some simple indicators such as the moving averages, the 18, the 50, the 116, 200, and the 250 to keep us in line. You have to adapt with what the market offers you. Don't be biased to one side and learn from it. So we can see from the February 19th till the March 23rd low of the COVID. We had the rally till 2022. Then in January of 2022, we had the reset till October. We rallied, consolidated. We eventually broke out in December of 2023. We reset in January 2024 and rallied up to the backside of the linear regression channel. You can see I have this purple line going up and I have one going back from prior couple of years. This was done hand drawn by us, and you can put a midpoint right here. We almost retested the high of it, but we rejected and came back in for the beginning of the year. But most importantly, understand the risk involved in relationship to the overall market. This is giving you the overall view of the monthly charts that we are still bullish, but we may get volatility in between in relationship to a 1 year, 2 year, then 3 year, 5 year outlook. So let's go to the next slide up here. And what I did, I put the Fortune 500 company, which is the micro E-mini S&P 500. This is what we call the volume profile. This is the volume profile and the time spent. The time spent is on the right side. The volume profiles is on the left side, which has a value area low. I marked the value area low. I marked the value area high, and it's in a cloud. Some of them are called monkey bars. It depends on what platform. On the right side, I put this is the time spent in a 24-hour period on a 30-minute where the value high is, where the value low is, and the time spent in relationship to the overall market. This is a daily chart, 24 hours on the profile. When you look above, this is inside consolidation. When you look above and fail, come back in range, or you look below the range and come back inside the range. Usually we're looking for either break above the range for continuation or look for breakdown for continuation to the downside. I put the last 4 days range in here to show you that we had an inside week for the whole week. It was a short week, but I wanted to make sure this is the Friday. This is Thursday. Wednesday was the New Year. This was basically the European mark. You can see this is 12:30 and this is 12:29. So I wanted to show this range on the monkey bars to make you understand where the value high is, where the value low is. It's in the cloud in the profile and the point of control where most contracts or shares are bought and sold. It's marked in purple color or in red. When the sentiment is down, the time spent would be lower from the high and low below the 50%. When the sentiment is higher, the time spent would be above the 50% from high to low. So I wanted to mark these. You want to learn a little bit about market profile, time spent in relationship to point of control, value high and value low. Please let us know. And I put as well where the open of each candle, where the market opens and where the market closes. You can see here, this is basically the close, and you can see where the open was on the charts every day. This is the open, the close. This is the open. This is the close. This is the open. So we opened high, we fell down. We opened high, we fell down. Here, this is your open, you fell back in. This was the open, and we rallied back up on Friday for the option weekly expiration, but we had an inside week for the whole week. So let's go to the next slide. And what I did, I put the S&P 500 from January 1st of 2024 till the December high, and I marked the high with a marker, with an oval, and I showed the 609 for the SPY, which is the electronically traded fund for the Fortune 500, and I showed the low at 460 low. It did about 24% plus, and I showed the midpoint, which is from high to low. I showed where the midpoint is. So I want everyone to know on a daily basis to use the high and low and the midpoint in relationship to the open and close. At the same time, find out where the gaps are in the profile. Like this, there's a gap between this candle here, I marked it. There's a gap between here and here, I marked it. There's a gap between here and here, I marked it. Not all of it has been filled. So we can look at this level to understand that there's a gap. Usually all gaps are fillable. You can see when we ran up, we came back, refilled it. When we went down, we came back up. There was gaps here as well as here. We came back up and filled those gaps up. So remember, we look for gaps up, gap down, and virgin control points in relationship to the market profile. Let us know how we can help you. And I showed here the 18 simple moving average. The 50 is in yellow, 116 is simple moving average in burnt orange, the 200 SMA is in white, and the 250, we use it on all time frames to keep us in line if we are going to be bullish or bearish. When the 5 and 18 crosses, to be bullish cross. When the 5 and 18 crosses from the top, this is a bearish cross, so the sentiment changes according to time frames and what we are looking at. Let's go to the next slide. And what I want you to remember, you can check us out at Solstice ATR, get in contact with us, give us your commentary, share with your friends, and let us know how we can help you. Let's go to the first chart. And what I did, I put the New York Composite. This represents the overall New York Stock Exchange, the breadth of the market where all stocks are moving up and when all stocks are moving down. And it gives you an overall view of the transactions that are happening. And this is showing you from beginning of the year till end of the year of 2024. And the reset in a wedge, we came back down in a downtrend channel. We are still in a downtrend. If I show you this is the Fibonacci, I'll use a Fibonacci to show you how to look at a fib. We take the highs to the lows of the year, and this is your retracement. This is your 50%. This is your 38, 23, and 78%. When we draw from high to low, you should have the 100 at the top and the 0 at the bottom. Usually the 61 and the 38 act as vice versa if you draw from low to high, where your support is. So the 61 will become 38% to know where your support is. And as well, where your 38% becomes 61 and 50, usually whenever we are above the 50. For institution, the 50% retracement, usually there are buyers and sellers. If we are underneath the 50, there are more sellers. Institutions will be buying more on the 50 and above. So this is how to look at it. And we look at the weekly and the monthly range in the S&P 500, in the NASDAQ, and the different sectors in the S&P. What I want to go over is showing you that the Mega 8, and usually most people talk about the Fantastic 7. I have included in the Netflix, I have Apple, I have Amazon, Google, Alphabet, Google, and Google. Remember, Google and Google are two. Then Facebook, which is Meta, Microsoft, Netflix, NVIDIA, and Tesla. I usually look at those 8 holdings in the NASDAQ 100 to keep me in line if the sentiment are bullish or the sentiment are bearish in the overall heavy weighted sector, part of the S&P, part of the NASDAQ 100. Then we have the S&P 500, which has the energy sector, discretionary, financial, utilities, material, consumer staples, technology, real estate, industrial, as well as healthcare and telecommunication. It gives you an overall view of those top 500 holdings in the S&P 500 to know what sectors. And from each sector, you can take 1 or 2 stocks, put them on your chart, learn these sectors very well. You don't need more than 10 stocks to trade and get to know them very well, or 10 ETFs to trade around them. Or if you trade crypto, Bitcoin, Ethereum, or an ETF of them, that should be okay as long as you understand the risk of commodities or forex. So this is why I wanted to put this chart up to give you an overall of the New York Composite on the charts and understand the risk involved when we're trading to the upside and downside. We're going to look at the micro and NQ. And what I want to do is on the daily chart to show you that we retraced in a symmetrical triangle here. We downtrended, we did a W, we consolidated for, we looked above, came back, retested that consolidation, broke up, came back, tested the 50. If I zoom in here, you can see when we were compressing in a symmetrical triangle, we looked below the 50 simple moving average. We double bottomed right here at 21,007. That day I was out on holiday, wasn't around. If I saw that double bottom, that was a nice opportunity to buy. We grabbed here, and when it cleared, the open and the close, and the next day in the morning, that was a rally back to the 38.2 because you can take the high to the low and measure it and retrace your W formation or symmetrical triangle. Look where we retested the 38.2 and rejected and closed right at the prior days on Thursday, where we lost the market and fell back down. So we closed right on it on the NASDAQ 100. So in order to measure the distances and understand the risk, we go to intraday. From the intraday, I usually like to use 30 days. From the 30 days, I usually use either 4 hours or 6 hours on the charts to give me an overall view of the overnight price action. Is the gray area between the European and the Asian market. The U.S. market opens up East Coast 9:30. We close at 4 p.m., 4:15. It depends on what commodity we're trading, and some go till 5 p.m. and some trade 24 hours. So the reason why I wanted to show this chart on a broken down, what I want to do is measure the distance from the weekly highs and lows. This is my Sunday high. You can see this is my Sunday high, my weekly low on the NASDAQ. So what I do, I get a measuring tool. I get the Sunday high to the low for the week. This is my measurement. What I can do is extend it to the left. You can see the day I got -1 +2. These are the extension from 0 to 100, 100 to 200, 0 to -100. These are the measured move when we get extreme moves and understand the risk involved. So what I want to do, take the data and take it back a little bit for 2 weeks. And I'm going to go to 0 to, you can see here it shows 0 to. It's okay. It's going to go a little bit further to the backside. And what I wanted to show is that double bottom retracement, the bounce up with 100% is where that consolidation, we looked above, failed, came back. The distance you traveled from here to here is the same distance from here to here. You can see that from 100 to 200, 100 to 0. And here, last week's range was narrow because we had a short week trading, plus the annual New Year, the Christmas and stuff. We fell down, we rallied back up, but we retraced only to the 38.2 on the Fibonacci. Fibonacci is 0 to 100. We have a 23, we have a 38, 50, 61, and 78%. I don't have the 78 or the 23 marked on the charts, but I want you to understand this is the ranges that we're going to look for in the coming week on the NASDAQ, or you can use the QQQ on the charts to give you the overall view of the momentum on the technicals to understand the risk involved. So remember, we're going to trade what we see, not what we think. And if you have more questions and you'd like to get in contact with us, please let us know how we can help you to understand how to use these tools and how to adapt them to your style of trading to be able to make the right decision when you are in the battlefield or when you take a position. You want to know why you are entering, where your stop is, where your target is, and what is your goal to make on daily basis. Don't look at the dollar. Look actually at your consistency of entering a position, exiting without being wrong, and at the same time protect your capital. So this is the most important thing I can tell you, how basically to trade supply, demand, momentum, and all that stuff. But you can ask us. Let's go do one more. I will do for you. And we're going to do the SPY. since we did it on the charts. And what I wanted to do the same thing. I can take the high from here all the way down to here on a Fibonacci level. We're going to do the Fibonacci to show you the highs and lows in those last 30 days. You can see where the high is, where the low is for the month. But this does not give me an overall view of what the market has done in the coming weeks. But I want to know where my 50% is, where my high for the month was, where my low for the month are. But I do not need to know anything other than those, so I can take all the other stuff off the charts, so I don't need the markings on them. And all I need to know is where my zero line is. The 23 I don't need to know, the 30 I don't need to know, the 61 I don't know, the 78 I don't need to know, all the extensions to the upside or downside, and I apply it. At least I have an overall view where my high is for the SPY, where my low for the SPY, and where my midpoint is for the month. But on weekly basis, I need to use the measuring tool to understand the risk that's involved, because this was Friday. This is the sun. This is the 27. You can see this is the 28, 29 in the European zone. So we take the high to the low for the measuring tool. And what we do, we're going to take that color and change it, edit the property. I'm going to extend it back to 02 like we did earlier, push OK. And what I'll do on the monthly chart, I'll edit this property and I'll make it off-white so everyone does not confuse it. Oops, where did I do here? Yeah. So we got the 0, the 50, and the 100 to the upside, where they are in relationship to the overall moves. And you can see where my weekly range is in relationship to the monthly. And what I can do with the weekly range is understand if I'm going to be above the 100%, am I going to run back up to the 200, or am I going to fall back, get back in the 20 to the zero line? Is there going to be continuation to the downside or upside? The most important thing is understanding the time spent in relationship to the point of control, and knowing the levels on any equity, any ETF, any option or commodity or crypto. So more importantly, understand when there are movements, fast, volatile movement to the upside and downside. These are the opportunities when all institutions are either buying or selling. That gives you an opportunity to know where those levels are and where the retracements are on a bounce. I hope this video was very helpful. Happy 2025. If you have questions, please get in contact with us. Let us know how we can help you. Take care. Over and out.